Hello and welcome to another update video about Ethereum. As we're heading into the weekend, it was an exciting week. As we speak, Bitcoin is going a little higher. We see coins break out. That's according to forecast at the moment. My immediate focus here with regards to Ethereum would also be on higher. We still have a bit of a fallback scenario, but for now I assume we break out, or we broke out. We did break above the previous wave 1 high, and we are pushing higher at the moment. So the idea is that obviously based on the Monday low, which was printed at around 1685, as you know, we talked about that Ethereum rallied possibly in a 5-wave move to the upside. At least we can interpret it like that. I currently view this as a wave 1. We then came down in an A, B, C correction. Talked about that earlier today. We said that as long as we're holding above 1717, that I would assume we are actually in a breakout. That a breakout is in play. Then PCE data came out, and that good, let's say favorable chart structure did meet a positive catalyst, and we saw a bit of a rally. Now this rally, this was just a dog noise. This rally is so far in 3 waves. What we eventually want to see is 5 waves, again, to increase probabilities for a positive outcome or for a bullish outcome. By the way, let me just, while we're here, add the timestamp. So again, the trend is up, and for further continuation, we need to see 5 waves up. We currently only have 3 up. That's why I did highlight here on the chart as well, a fallback scenario. So just because we rallied doesn't mean we are in a breakout. There is always, of course, a bearish scenario present that we need to know for our risk management if we're trading this. So there is always one, right? That's unfortunately the case. We have this scenario that we rallied in 5 waves. So the bearish one, it's not bearish, it's also bullish. It just means that we could still come back into the orange box. So we could say we rallied in 5 waves. The move down earlier, yesterday that was, where we hit the 1765 low, was just an A wave. We're now rallying in a B wave because we only have 3 waves so far, and could then still come down in a C wave in 5 waves into the orange support area. But that doesn't change the overall assumption. Listen to what I said. I did say as long as we're holding above 1717, a breakout can be considered to be in play. So even if we come back into that orange box, this could just be an ABC structure, and the wave 2, which I currently put here at the Thursday low, could just be reset and will eventually sit here. That's possible as long as the 1717 level is holding. From here we could then attempt the 3rd wave rally. So that's sort of the situation we're in at the moment. But for now, as long as we are above a certain level, which I'm going to tell you now, we can focus imminently on higher. So first of all, let's zoom in a bit. The bullish count is highlighted here in green. So this is really the micro level, but nothing else happened on the larger time frame. So we're focusing here on the micro level. Wave 1 to the upside. This was yesterday's high at 1800. A overshooting B wave. C in a small wave 2. Today, a rally in a 3rd wave. Could be complete. Let's measure that with Fibonacci extensions. In a 3rd wave, we always want to see the 1.618 Fibonacci extension. Yep, done. I mean, that's the minimum. Okay, so we've reached the 200%. Could now be in a 4th wave. That might be over shortly. And then we need one more wave up to again increase probabilities for a breakout. After that, we should get a larger setback. So basically another 1-2 setup. Not going to put all these micro levels here onto the chart, the micro degrees, which just mess up the chart. But be aware that there is a certain level that this wave 4 needs to hold. So what that means is if we break below a certain level now, it would indicate, or it would increase probabilities that we are going to fail here and will come down and play out this C wave and come down a bit lower. So for that imminent breakout to carry on, we need to hold the 50% Fibonacci retracement of the 3rd wave. So that's the wave 4 target, 1813. So this level just needs to hold. Let me just double check if I put that correctly here. You could say 1810, right? I mean, it's sort of, but yeah, 1813. You don't want to see that broken. If it's broken, okay, with the wick to the downside, not a problem. But if we see a sustained break of it, it will be a problem. So at the moment, it looks like support is holding. So this wave 4 might be finished. It could also unfold as a triangle before we see that 5th wave. So the key point here is 1813. What happens if we break below 1813? Well, it could then still morph into a 1-2-1-2 setup, which is always unreliable, or come down in a C wave. Yeah? But ideally, it would hold 1813 for an ideal structure. And then what would be the target for the 5th wave? For that, we take length wave 1 through 3, go to the low of the 4th, look for the 61.8 extension at 1866, possibly all the way to the 1-to-1 ratio at 1897. That would be the target range here for wave 5. And yeah, maybe we see that happen over the next few days. And this is currently the microstructure, how it should ideally unfold on the ETH chart. Yeah, and this is sort of what I go with at the moment. Overall, the trend is up, as you know, against our support areas. Reacted quite a lot of times here, quite a few times to this support area in March. So that worked out nicely, and let's see if it can now do the breakout. It hasn't broken out of the range yet. So with that wave 5, it might do that, but we really need to see a sustained break above 1860 eventually. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.